Hello，大家好，欢迎来到这个乐学成长空间。那么今天我们将会继续我们这个老板面对面的系列。那么如果你是第一次看这个系列，老板面对面，顾名思义，也就是我们会邀请一些马股的上市公司啊，或者是创办人来跟我们聊聊一下，到底他们的公司有什么我们值得关注的事项。那么今天我所邀请的公司它所处在这个领域，可以说是大家都非常兴奋也非常火热的领域，也就是这个科技领域，更准确来说，也就是这个半导体领域。而这家公司也就是 QES Group Berhad。那么在我们继续之前今天这个影片也会跟我过往的这些视频有一点点小小的不同，我将会尝试以这个全英文来进行这个访谈那么也不用担心，将会有这个双语字幕。那么事不宜迟，就让我去转换我的英语模式吧。Hey everyone, without further ado, let's invite the co-founder, the president, and the managing director of QES Group Berhad, Mr. Chu. Hello, Mr. Chu. Welcome to my channel, and really appreciate your time taking this interview with me. Why not take this opportunity to say hi to the audience?
Hey, hi. Good morning, Leslie. Well, thank you for inviting me to your channel. So I'm more than willing to have this open discussion with you as we go along the interview.
Thank you, Mr. Chu. So, as mentioned earlier, QES Group Berhad is in the semiconductor industry. And I did make a video earlier to kind of explain the business model back in 2021. However, if this is your first time getting to know about QES Group Berhad, why not let me spend a quick 2 minutes to explain what is the business all about. So, let's check out the video.
QES 是有主要3个业务，分别是 Manufacturing、Distribution 和 Spare Part and Services。但是如果我们要更细分，也可以把它们分为2大板块 Distribution 和 Manufacturing。 Distribution 其实也就是指公司提供器材给客户，当中包括了半导体领域、电子领域和汽车领域。简单来说，也就是一个代理商、中间人，把器材从厂商连接到给终端用户。而根据这个图，我们是可以看到他们是从一些比较大型的厂商，如 Nikon、Hitachi、Vesco 等等拿货，然后分销出去。同时间，因为 QES 提供了顾客器材，如果器材需要什么零件或者售后服务，也会贡献给这个板块的收入。这也就是公司强劲的可持续性收入来源。Manufacturing 其实也就是指公司与其做中间人的生意，他们自家生产器材，直接卖给终端客户。而自家的器材就专做给半导体领域。那么他们都服务着什么样的顾客呢？当中就包括了 Panasonic、Canon、Samsung、Toyota、Honda、Infineon、Texas Instruments 等等。
Welcome back. I hope that quick 2-minute kind of give you a pretty good idea on what QES is all about. So, Mr. Chu, first of all, congratulations on 2021 overall performance. We can see that your revenue in comparison to 2020 has a 43% growth, while profit actually did a really good job, which grew close to 120%. If we look into the details, we can see that this increase was mainly driven by the distribution section, while the manufacturing division can consider remain relatively flat. So this comes to my two-part question. With the current macro situation, there's a war going on, which disrupted the supply chain market further. With your experience, do you anticipate this has any effect on your day-to-day operation? And my second question would be, we know that there are 3 main revenue segments. There's like semicon, automotive, E&E for QES. Do you think that your customer will be affected by this disruption?
All right, Leslie. Yeah, I think that's a good view to actually explain the revenue segment in terms of distribution and manufacturing. Now, I just want to probably kind of elaborate a little bit more on why we end up last year based on the results that we have just announced. Basically, distribution is still a very core part of QES. We started from distribution, and manufacturing was the secondary core business that we went into. Now, last year, I was actually forecasting to hopefully achieve 35 million. I mean, for the manufacturing side. We were on track until towards the last quarter, and there's one large order that we're supposed to ship out to China. Is worth about more than $1 million, close to 5 million ringgit. So that order is supposed to go out before the end of the year. And because of the supply chain issues, and also we need to spend a little bit more time optimizing the machine, and it's going to China, so I'm a bit more careful. So at the end, we made the decision not to rush it, and it went out only in Q1 of 2022. So that kind of off from my earlier forecast of about 30 to 35 million. So we actually achieved a very flattish growth of around the same level as we got in 2020. So that, basically explained the reason, partially because of the supply chain issue, partly also because we need to ensure the machines are in good condition when we go to China.
Got it.
And the second point is probably on the narrative of the distribution side. We had huge growth. I think, we are always into semiconductor, and that itself, our clients actually, capex investment is huge last year. And also that you remember in the early part of 2021, you look at our announcement, we actually took over Nikon Malaysia operation. Nikon, I think Japan, they have decided to shut down the operation in Malaysia, and they actually asked QES to absorb the staff and also took over all their clients. And that itself contributed about probably 6-7 million ringgit of additional revenue into our distribution coffer. So in that sense, so you can see a big disparity between distribution and manufacturing.
That makes sense.
Hope that gives you an idea on what happened towards the end of 2021, or rather the whole of 2021.
Yep. So I'm just curious, with the war breaking out, do you think that is going to affect your day-to-day operation?
I think I was about to also answer your second question, or was it first? I can't remember which one. By the way, is the Russian-Ukraine impact. Our clients, probably we are not into the real commodity business, the sunflower seeds and all that, or gas, oil and gas. So we are not really into that segment. So we are not really affected to a large extent. And you also notice that most of our clients, I think 50% are in semiconductor. Revenue distribution point of view, and around 18-20 is metal, automotive, and the other balance of another 20% from E&E. So in total, there's about 90% of our total revenue breakdown. The balance are maybe mining, oil and gas, and academia and all that. So these are all distribution units. But generally, 90% of the three main segments, we are not really impacted by the Russian-Ukrainian war, except I would say, maybe the shipping. I just heard in the morning as I was driving back to the office, there's the large crew members of shipping lines. They are all Ukrainians and Russians. So how is it going to play out eventually in terms of the shipping and all that? So generally, our customers are not really impacted by this Russian-Ukrainian war. So I hope that also gives you a perspective of who are we dealing with in terms of our clients.
Yeah, but that's good news that with the macro environment, that the demand is not affecting the semiconductor industry. But based on our conversation, it seems like maybe shipping wise, we will expect some delay probably on and off. Let's move on to our next question, which is regarding QES expansion plan. So we do know there's kind of two main expansion kind of going on, which congrats on your recent move to your new factory in Shah Alam. So it seems like this increased your overall space. Would you be able to share us how critical this move is for QES, and what is the revenue generated for the manufacturing division with this expansion moving forward?
We just moved in about 3 weeks ago, 23rd of March. It's just 2 streets away. We are still at the Highcom Glen Mary site. As you alluded just now about the increase of space. Yes, I think our manufacturing has space point of view has jumps up more than double up the size almost. So our old factory, I think we used to make maybe capacity of around 50-55 machine a year. This new site here, probably I can maximum capacity 80 to 100 machines easily.
Okay.
So that probably position us well in terms of getting more manufacturing output as we go along. Of course, it's not like you have a switch that immediately you just go up. There's a lot of work ongoing. So we have a clean room just commissioned as well. So it's going to help us in terms of securing equipment that necessarily requires a clean room environment. So this new site has this so-called ability to do that. We are putting a lot of resources and also money into manufacturing, as the QES Group, as I said earlier on, started from distribution, but now we're trying to pivot the whole base, moving more towards manufacturing. But of course, not forgetting, distribution is still a very profitable business for us. So, that itself is going to continue because we have a large ASEAN base that is about 700 million people, all industrializing fast as we go along. So that helps. But in terms of manufacturing, we are very focused in semiconductor. And as you know, if you read or your audience probably know, semiconductor is still growing. I'm expanding on the backdrop of a growth in semiconductor, a growth in all the electronics, whatever that our customers are ramping up and making all these devices that is going to be applied to, whether it's 5G, whether it's EV, whether it's IoT, sensors, cloud, AI, whatever you name it. So they are all our clients. So once they expand indirectly, they will need some of our machines, because our machines in broad categories, inspection and measuring, one range of them. The other one is automatic handling, meaning that a lot of customers who need automation, need instead of manual or semi-automatic, they want automatic machines to handle their processes due to the stringent requirement as we go along. So, that probably gives you an idea why do we expand and how we're going to, capture the market as we go along.
Got it. Seems like based on our conversation, it seems like you guys start with distribution, but now you guys having like shifting your focus to manufacturing. And then with this Shah Alam new factory, it kind of helped you guys achieve like with the extra capacity. And it seems like you guys also bought a land in Batu Kawan to try to have a factory. So
yes,
with all this expansion, how will this shape QES like sales proposition in the future? Like what I'm trying to say here is like regarding like the distribution and manufacturing, how is the percentage or how is it gonna look like in the down the road?
All right, that's a good question as well. We, as I earlier on alluded, that we are trying to pivot the whole group towards manufacturing. Now, the new factory lots that we acquired, 2 acres land in Batu Kawan, that plan is going to not materializing so soon. We have not built the factory yet. I plan to start moving, priming it sometime after July,
okay,
second half of this year. So, because we just finished this site at the Glamoury, so I need to take a little bit of breather and then start to look into the second plant in Batu Kawan. Now, all these activities, a lot of people ask me, why do you have a second plant? You expanded in KL and then you're going to have a second plant in Penang. So there's aggressive expansion. Yes, I have no question about that, because Batu Kawan is the place for semiconductor equipment and also medical technology. So you can notice all the FDI, they're all sited at around Batu Kawan and Bayan Lepas area with all this announcement the last 2-3 years. So there's a huge potential. We want to be close to our clients. At the same time, we also want to leverage better in terms of their ecosystems. So to me, I know to have 2 sites making this type of equipment is always better, so that I can do a better risk management, a better, floods happen like last year in Shanghai. So in going forward, at least we have 2 sites running in parallel. That will be helpful in terms of our worldwide semiconductor customers. So that's one aspect of it. To your question about the ratio between distribution and manufacturing, yes, it's always in our pipeline to really increase the distribution revenue. My plan is to move it up to 30-35% at least, the next 2 years or so. And I had great plans 2021, but as I said just now, we couldn't managed to get the revenue in place. And just to give you some colors into what's happening in 2022, I think our manufacturing side, our carry forward probably around 8-9 million ringgit from last year.
Okay.
And up to end of February or middle of March, we have quite a huge momentum order intake from our clients, semiconductor clients, manufacturing side. So I believe about close to 20 million ringgit of orders just came in about last 1.5-2 months. So you add, you add the carry forward from last year plus the order intake is already close to 30 million. So I'm comfortable that because now it's still early of the year, I'm confident that we can deliver all this. So to speak, I have close to 30 million in the pocket, and I'm trying to get more orders as we go forward. And I think manufacturing side will do well this year, subject to delivery issues.
Got it.
I put a caveat because I've been getting reports that some of the critical components that we order from Japan, for example, the linear guides, the robotic arms from our supplier in Japan, the delivery time just extended. It's like usual 3 to 4 months. Now it's like 6 months, 7 months, some of them. So in that aspect, so sometimes this delivery will cause our missteps in terms of shipment. Because let's say I have all things ready except for 1 or 2 critical components, then that impacts the delivery. So this is my biggest fear, if you ask me. But in terms of order intake, I have no issue because most of our clients already placed an order because they are planning. They are doing some planning as well because they knew that the supply chain or critical components delivery issues are playing havoc in the systems. So they are actually issuing POs ahead. Like for example, our clients they usually buy next month. Now they pull in and say, I buy now, so to save at least 6 weeks of additional. Something like that. So I hope that gives you a better picture of where we are.
It seems like QS has great effort or great willing to put more effort into growing the manufacturing business. And just for the audience, the reason that why this is important is because that manufacturing division actually generate a higher gross margin. So if the manufacturing portion of the revenue grew bigger, it actually helps the company profit as well. And then, Mr. Chu, you kind of touched on 2022 with you guys have a strong backlog order coming in. And then we know that some investors, they are kind of long-term believer, long-term investor. They prefer the long-term outlook. Would you mind sharing what is the long-term outlook for the next 5 years for QS?
Yeah, I mean, of course, we always have a rolling 5-year roadmap. I put it internally. We do that. So I keep on updating the 5-year plans as we go along. Now I see, I've spoken quite a fair bit in terms of manufacturing. So that's where we intend to grow so that, let's say, example, our distribution, our total revenue is, let's say, I just put down there 200 million because we achieved 228 last year. So let's say assuming 200 million. So we want to have at least 30-35% of that pie is into manufacturing from our organic growth. So that's where we want to be. And I think because our own manufactured products, basically we don't have any country restriction, whereas the distribution, we are very focused in ASEAN. So that's a big difference here. And the fact that this 5-year plan also, we want to be aggressively moving our manufactured products to China. And that's where we think, I just read a report this morning, China last year was the biggest consumption in terms of semiconductor equipment business. Of course, those are big boys, front end and all that. So China is still ranked number 1 in terms of the total equipment or by value basis last year, 2021. So we think there's huge potential there. And for QES Group, our exposure to China is still very, very low, single digit kind of percentage. I think going forward the next couple of years, we intend to grow that segment a little bit more, via good branding, via good distribution outlet, once the COVID-19 traveling restriction is off, then we can aggressively participate in the exhibition and get the QES name. Because right now, some of the domestic semiconductor players in China, tell them who is QES, they probably don't know. Okay. So, whereas all the ASEAN-based semiconductor customer, you tell them who is QES, then they automatically know what we are doing. So that is something that I want to build in China, so that will add on to the growth plans that we have. And distribution is huge, so the growth is probably, you can generate 8%, 10%. I think it's considered very good because it's a large base, right? Whereas manufacturing, I'm always aiming 30% growth, 40% growth, that kind of charter for our manufacturing side, so that on the overall, I hope my blended growth at least of 15% CAGR, that kind of range over the next 5 years. So if you're talking about, if you hit 15%, instead of 10 years, double up, 5 years I can double up, or 4.5 years I can double up. So to me, that is something that we plan to put into place over the long term. And I believe we should be able to. And judging from the results that we've got the last 2 years, I think we are on track, so to speak.
Okay, so let's move on to the next question. So in the past conference, QES always positioned yourself as the front of the back end, and at the same time, the back of the front end in the semiconductor value chain. Would there be any change in terms of your product and services offering while you increase your capacity, manufacturing capacity from both plants going forward?
Yeah, I think that's a good question. In terms of product development, yes, we are all along in the back end, the test and assembly, the IC packaging side. So you can see all the processes. We have equipments going to different types of processes. But going forward, we are of course trying to make equipments that is applicable into the certain part of the front end processes. So examples, like our automatic handling system, we have a wafer sorting machines, we have wafer transferring machines. So we have now, of course, launched recently a wafer inspection that can be applicable on the end of the front end processes, and also the front of the back end, as you said. So that product profiling probably give us some leverage to move into some areas of the front end where traditionally is dominated by the big boys. So we are playing just some smallish role along that. Now, why is that so? Because we think as we go to China, there's a lot of potential, because China has got invested, and the government has put a lot of money in terms of wafer fab, and they are probably not the high-end series of the fabs, like TSMC, Samsung, or Intel. These are all like 3 nanometers fabs or 7 nanometers fab. But in China, there's one whole bunch of fabs that is still running on, probably 12 nanometers or even 13 nanometers range. So our equipments probably are more suited towards a little bit of the low tech side, so to speak. And we think there's some potential in terms of that area of products. So you can see going forward that besides the IC packaging equipment, we will have a little bit of this front-end equipment as well. And since we are on this topic as well, so we also went to a joint venture with the US, even though it's a 30% equity stake also in Penang. But that company, AE, they are making a lot of sub-modules for the front-end equipment makers. So in one way or another, it's also a learning process for us, and that could be also our good technical partners to help us to increase the speed of time to market. So some of our product lines that we want to develop. So I hope that gives you an idea of the product range that we're going to move ahead in time.
Yeah, definitely. It sounds like you guys are going to be widening your product offering, and then this translates to higher revenue, possibly. So let's move to some more what I consider more juicy question. So back in July 2021, QES share price reached close to $1, which is your all-time high. And at the time, QES only announced your Q1 and Q2 result. However, when QES full year 2021 performance ended at its strongest year ever, there's a drop in share price. Would you mind sharing your thought on or view on your current valuation? Is there anything that investors should know or we are missing?
Yeah, I mean, valuation is an art, I would say.
Yeah, would agree. Yeah.
So for me, I would just focus on churning out good sets of results, churning out good profits, and growing the company. So that's where we are focusing at. In terms of valuation, I guess is this in fact which segment you have been ascribed the PE ratio and all that too, and looking at QES today, I think we are probably around 25 to 27 PE kind of range. You ask me, yes, I think we are a little bit low in terms of ascribing the PE to QES Group, and probably maybe because we are a big percentage of revenue is distribution, and then a smaller percent in manufacturing. So maybe the investor are ascribing a lower PE to QES. But going forward, as we grow the revenue of manufacturing, so the PE, so-called valuation, then it could be different. So my own take is important to make sure the company has good cash flow, important the company make profit, and also have a good growth plan. So eventually, then the investors, whether you are retail or you are high net worth or you are fund institutions and all that, so they will look into all these areas. So I believe that it's really you invest wisely, so to speak.
Okay, fair enough. But I guess based on what you say, I guess what you guys are focusing is taking care of the fundamentals, which is the business itself, and
Right.
valuation, let the market take care of it. Okay.
Yes.
Mr. Chiu, it seems like the time is almost come towards the end. Is there any other information you would like to share to the public before we end this interview session?
Yeah, I mean I just give you a quick summary, in a way that where we're heading into the 2022. So I think the order intake is still very strong. The momentum from semiconductor customers are basically they are chasing up some of the orders. So that is a testimony of the so-called we are operating in a segment that is still growing. Of course, in the next 3 to 5 years, the backdrop is growing, but in the quarters you will feel some dip here and there. But you chart it out overall, you will still see a good growth because of all this application that is coming along as we go. And even as we speak, Malaysia is still not running on 5G. And then EV, the exposure of ASEAN is still very low in terms of electronic vehicles. So you can see the room to grow for all these things are still very, very strong. And we are actually exposed into that environment. So we think the business is still continue to grow in terms of that. Now, a lot of investors probably do not know that we have a strong recurring income. So this is one that I wanted to highlight because we are a little bit different from our Penang peers. As you know, we started from distribution. So we have, 3,800 over customers. So that's a huge database of clients. And these customers are having more than 12,000 of our machines install base. So this install base actually generates income for the group. So we have on average about 40 million ringgit of revenue every year consistently, and with very good GP because these are all like maintenance contracts, these are all spare parts sales, these are all per diem service calls. So this is I would say is it kind of gives us a pool of income that is very consistent. Then we can focus on generating the manufacturing revenue. We can focus on building new markets and all that. So that itself to me is a little bit different from a lot of other players. So I hope that gives you an idea of who we are and what we do and how do we grow the business over the next 3 to 5 years. Yeah.
Once again, I really appreciate your time in taking your busy schedule to have this interview with me. And I hope there's more collaborative event in the future with QES. And I'm also looking forward to your upcoming Q1 result for 2020.
Yeah, sure. Yeah.
Yep. With that, until next time, have a good day.
Thank you. Bye-bye.